All right. Hello, everybody. We are here. Tesla Q4 earnings breakdown. I am here with Tevis from the Fundamentals of Investing podcast. His link is in the description. He is also one of my co hosts on SoFi Weekly. Tesla has reported their earnings. They reported fourth quarter earnings for 2022, including a revenue of $24.32 billion and earnings per share of $1.19. Automotive revenue amounted to $21.3 billion in 3 months ending 2022 and included $324 million of deferred revenue related to companies' driver's assistance systems. Automotive gross margins came in at 25.9%, the lowest figure in the last 5 quarters. A lot of people were expecting that margins would take a little bit of a hit. So, Tevis, I guess the first question for you, Tevis is someone who's been investing in Tesla since 2019. It's almost half of his portfolio. So he's been in the stock for a long time. As a long-time shareholder, what were your raw thoughts on this earnings?
I thought everybody thought it was going to be much worse than it actually was for Tesla. I mean, we knew the margins were going to take a hit. I think there was plenty of forewarning for the margins to take a hit. But other than that, I mean, they beat on a lot of the analysts' expectations that were out. I think a lot of the other numbers were fairly good in comparison. I mean, everybody knows that traditionally automotive has been very seasonal, and going into a recessionary period, people don't want to be making big ticket purchases like buying a new car. And so, with that as the backdrop, and many analysts still viewing Tesla as a traditional automotive company, that really set a very negative tone. It painted a really negative picture for Tesla going into this earnings, and so it was a beat. They came in better than people were expecting, but expectations were fairly low. And then on the call as well, I think they dropped a lot of hints as well. And one of the things that I'm also interested in is I was listening to the call just before getting on this, and they were talking a lot about their March 1st event, which I think is really going to be a game changer. And we can get into that. I'll actually add that to our notes for us to dive into. But overall, I think expectations were really low, and the stock traded flat the moment that these earnings came out, even though they beat on both top and bottom line. And then after the call, and they were explaining, the demand concerns. That's what Elon first started off the opening remarks with, were demand concerns, cost reductions, operating margins, full self-driving, energy storage, which I think beat a lot of analysts' expectations, which, I mean, we're going to go into the numbers too. As soon as he started talking about those, the stock then started moving up, and now it's up, I think, over 5% in after hours.
Yeah, it was interesting to me to see the numbers. The market definitely liked what they saw, even though, within 30 minutes of the numbers coming out, the market was a little bit confused about where to take the stock. Should we go down? Should we go up? That's why it stayed relatively flat. And then I think as Elon started talking, as the same sort of talking points got more reiterated, questions got answered, the market took it up. What is it? A couple percentage points at 151 now?
Yeah, it's like about 5.5 right up now.
5.5.
So it's been trending upwards. I think it was a good move to start off the call immediately addressing demand concerns. I actually took a bunch of notes during the earnings call, and Elon was basically saying in January they saw the strongest orders more than ever in history, currently seeing orders at 2x the rate of production. So if you think about that, like there's no, they're still very much a supply constrained company. They're selling every car that they produce. And all it took for them was one little tweak of the dial for everybody to realize that, wait a minute, demand is not really a concern, because they can artificially reduce prices even slightly. And they actually said that they raised Model Y prices a couple of days ago, I think about a week ago, as a result of this, because they reduced prices across all of their locations, started out with China and then North America as well. And they saw such high interest that from customers that they actually had to raise it a little bit again to just artificially taper what that relationship looks like. So they reiterate that demand looks really good, despite the auto industry contraction that we're seeing start now and is going to continue in 2023. But I mean, immediately setting off the stage with that is fantastically bullish, right? Because that's one of the biggest concerns that Tesla bulls and bears had with regards to them going into this year. I mean, of course, bought Tesla at the beginning of the year. I'm going to probably buy more in January. If it falls, I'm buying. If it rises, I'm buying, because my plan is to hold for long term. But I was buying even before this call without knowing the answers to a lot of these demand concern questions, even in spite of 2023 being a really rough demand year, right? If 2023 was a year where, Tesla saw a lot of their revenue increases dropping, a lot of their orders or demand concerns starting to hit, I was expecting that from a short-term perspective. But the fact that they immediately jumped the call and said, "Hey, we actually had our strongest month in history, and we actually had to raise prices a little bit to taper that," like, that's incredibly bullish, in my opinion. Of course, I'm biased though.
Yeah, it was really interesting to me when they said, I mean, Elon's opening remarks were demand is 2x what we can produce, which means we're supply constrained on our ability to get these vehicles out the door, not demand constrained. That counters every, I don't want to call it mainstream, but basically cliche mainstream narrative that has been happening, that Elon's political tweets, his stance on Twitter, stance on politics, stance on, still being the CEO, all of that was hurting Tesla's brand. I mean, the answer is no. I mean, consumers are choosing to buy the car regardless of, they're choosing to listen to Kanye's music even if they don't like Kanye. And as a result of that, that means production is not the reason for why they're not demand constrained. Do you think that in the first, I think, 7 minutes of the call is what allowed a lot of the market to internalize some more positive momentum towards the stock? Because if that's the case, there's not really a bear case, at least for this quarter going forward.
Well, so at least I don't know if that's what necessarily moved up the stock, because I was still trading flat during those opening remarks. I think it really started moving up towards the analyst Q&A, where a lot of hints were dropped, and we can dive into those. But I think you just hit the nail on the head, where bears are running out of short-term arguments against the stock. Like, everybody has priced in the fact that we're going to be in a rough macroeconomic environment for auto specifically, being where it is as a traditionally seasonal business. That's priced in. Tesla fell like 70% in 2022, something ridiculous. So, and then the other argument was like, Elon is taking too much effort away from Tesla towards Twitter. And then Elon came on a Spaces and basically said, "Hey, Twitter has a huge revenue problem right now. I'm trying to taper that. And then by January, February, I'm going to be like kind of there. And then by the summer, my focus is right back on Tesla. And I haven't missed any single meetings in this entire time." Right. And so if you put those things together, if the demand problems are not, as big as the rest of the auto industry, and Tesla, by lowering prices, is actually going to capture a much larger market share because traditional players can't compete. And then if you take away the fact that Elon is going to divert his focus back to Tesla, and pair all those together with the great earnings where, the company double beat, basically, I think there's no real short-term bear cases right now that I can see. Again, the whole primer to this is that I'm biased. I think we both are, but I don't know. You tell me what is like, oh, we're going to be in a rough macro economy. Oh, free cash flow is going to take a hit. Oh, margins are going to take a hit. Yeah, great. We know the stock has fallen 70%.
Yeah, it just screams buying opportunity, right? It's like this whole month. Even Elon tweeted. I remember one point he tweeted, he was just like, "Well, it's a buying opportunity." It's so interesting because the way he talked, the confidence he had, he was kind of just like, "Look, I know this is gonna work, and you guys can do whatever you want to do, but this is what I'm." The only questions he didn't answer were some of the questions that were like this absurd level of predictions people wanted from him. But outside of that, it seemed like he was incredibly confident. And to answer the question, the bear case was, over the past couple months, three things. Twitter drama, seems like that's gone away.
Mm-hmm.
Competition with the price cuts, seems like that's also been like, well, it seems like it's so obvious, right? Well, if you cut prices, then how are you going to compete? It's like, well, that's gone away. Even though obviously competition is coming, the question becomes, why would people pick the competition over something like a Tesla if prices are down? And then third was demand problems, which was answered above today, that demand is simply not a concern. And one of the other points he reiterated, and we'll talk more about FSD, is every car they sell has a software revenue model attached to it that we just have to upsell customers on, that he believes they have the best AI in the world to be able to do that. So the bear case for the stock is a little hard to conceptualize right now.
Yeah, and there's a lot of points to pick at there, and so I'm excited to go through it all. But starting with FSD, like one of the most exciting things on that call, and it's a reiterated point that we know fairly well, but I think a lot of people still don't realize is that software component. That's like pure margin for the business, right? They can have the FSD take rate be, they just need that to increase because that's just going to be pure margin for Tesla. And the other thing that they said was now that they reached FSD beta to 400,000 customers in North America, that was the new metric that they released as a result of this report. It's having almost a network effects in terms of the growth, because the more people have it, the more people are talking about it, the more people are tweeting about it, and the more people want it. And again, FSD is something that helps with their margins. It's padding around their margins, because if I lower the price on a Ford, I sell it once, I collect that money up front once. But FSD is something that at any point during my owning a Tesla, I can just upgrade to FSD and give them an extra 10 or 12 grand. And so that is something that every single time that they sell a car, it unlocks potential upside from software. So the value grows as the capability grows, and as the FSD beta program expands to more people, even more people will want to try FSD, and that take rate will increase. And what that will do is it will increase their margins to get them through this tough period.
And there is no other car company on the planet that can do that, right? There's no other car company that can sell a car as a loss leader and then make it up with 80% margins with FSD.
I mean, they're not even loss leaders, right? Because from a production perspective, it's more costly to build an OEM than it is to build an EV. And so they're making margin on the car in it, like more so than a traditional legacy player. And then they're making the software on top. And who can compete? Well, name me another company that can actually, have an over-the-air update, right? So dude, it's like saying like, oh, I bought my Apple MacBook in 2016 and I was on whatever the OS was back then. I can't update my OS now that it's 2022. Well, there's lots of people that are still using their old hardware, but their software just keeps getting upgraded every single year. And what happens is that hardware stays relevant, right? And so what are we seeing when we're seeing these gigantic fluctuations in terms of supply constraints for used vehicles? And what is that doing? It's affecting used car prices, where used cars were actually increasing in value, appreciating, right? Like not depreciating because of the software. Like the car has gotten smarter over time. And that's essentially the value of the full self-driving program.
They said we've now released FSD beta to nearly all customers in the US, Canada, about 400,000 of them who are testing on the beta. And obviously, if they're testing on the beta, they're also learning, the Tesla AI models are learning even more as those customers begin to implement with the beta. So, I mean, it's an exciting bull case because, again, if you just take 20, 30, 10 million cars, put up a 45,000 average price, 25% margin, you do some numbers, you get to a 6x from here, a $600 stock on a very base case level. If you get a $20 EPS times a 30 forward PE, divide that by 3.4 billion shares outstanding. So that's just a base case on selling those cars. That has nothing to do with energy, potentially a Optimus bot or anything like that. So there's a lot of stuff to go into. So I guess let's transition to energy and let's talk about that. Let me pull something up real quick. So energy storage, let me actually just share this little blurb they have, and then we'll get more deeper into this. Now, I know very little about the energy business. All I know is that it's the fastest growing business that Tesla has. So energy storage deployments increased 152% year over year in Q4 to 2.5 gigawatts for a total deployment of 6.5 gigawatts in 2022, the highest level of deployments we have achieved. Demand for our storage products remains in excess of our ability to supply, another non-demand problem. We are in the process of ramping production at our dedicated 40 gigawatts megapack factory in California to address the growing demand. The factory should help to further accelerate growth of energy storage deployments. There was a question they asked about how many places do you think will need energy storage? And Elon, I think he kind of was just like the whole world, right? Can you speak to a little bit about the high level overview of this energy storage business and how well you think the margins are on this and how much it can grow?
Yeah, so I think at a super high level, this is the part of the business where analysts disrespect, let's say, the most. energy storage is like one of their core pillars, right? In order for them to become sustainable. And it's seeing historical growth, right? It's one of the key components of the strategy. He said, I think they said on the call, expect the Megapack to grow faster at a faster rate than the auto business going forward into the future. And this is the best ever with both residential and utility scale projects. And one of the things that I think a lot of people don't understand is how little it takes from a gigawatt hour perspective to power so much, so much surface area. So energy storage deployments are going to be really important, and it is one of the big components of this business that just keeps growing and growing. And that's both B2C and B2B, right? They have the solar packs and the solar roofs that are residential. They also have B2B agreements with companies that they're just providing entire facilities. One of the other things that I want to say on that might have been missed, and I think later on I'm going to do a video around like 10 things you might have missed around the earnings call, because there were just so many like little nuggets. Yep. Elon was asked around megapack factories. Basically the question that you just asked, saying, okay, how much is needed? How much are you building? When can we expect something? I think analysts are very impatient when it comes to those things. And Elon basically said, we're going to provide an update on that later this year. So there's probably going to be more that's coming. I mean, this is coming in light of the news last night that came around the $3.6 billion investment in Giga Nevada. A lot of that was energy related and cell pack creation, right? So they're expanding their Nevada factory. They're going to be announcing new megapack factories around energy. And so energy is just having that exponential growth curve. And because everybody is so laser focused on Tesla as being a pure auto company, they have complete blinders on when it comes to FSD, when it comes to energy, when it comes to the dojo, when it comes to the AI, when it comes to Optimus. So when it comes to Tesla insurance. So, if you look at this company through one lens, that's fine, but you're going to be missing out on the entire vertical integration stack that the company comes with.
What could a Gordon Johnson bear case be made right now? In fact, I'm going to go to his Twitter and see if he's tweeted anything. But do you think there's any argument he could pull on this quarter for not being a...
Dude, I'm sure there is arguments that he can pull, because he's been pulling them for the last decade. But the thing is, like, any numbers that you cherry pick, you can craft a narrative around that. And all I'm urging people is to look at the numbers as a whole and zoom out and try to extrapolate that trend. Because if we look at just this quarter, we can say, oh, the actual margins for this business dropped, 70% operating margins. This was hit. Cost of goods increased as a result of raw materials increasing, inflation increasing, lithium prices are increasing in 2023. So Tesla is going to lose their competitive edge because the margins are dropping and the costs are increasing. And sure, you can make that argument, and it might be valid for maybe the first half of 2023. But if we zoom out to 2024, 2025, that's a temporary headwind. And so, I mean, you could still make the argument for Elon being allocating a lot of his time and cognitive load to Twitter as well as a potential argument. Like, you could make that, but how impactful is it? So that's why I always defer back to, let's just zoom out and look at this as a whole and go from there.
Gordon Johnson has tweeted. Indeed, he is. He's messing with Hole's Mar catalog blog, that account. He said, "Hey, you said they do $1 billion in 100% FSD rev in fourth quarter 2022. They did $324 million. So is it fair to assume you don't understand the puts takes around Tesla's deferred revenue account? You were off by 67%. Could your comments have misled you in your mind?" So he said that the FSD revenue is not a lot. Then he says the margin erosion at Tesla with just a 1.5K price cut in Q4 across the suite of cars is much worse than it looks. Below are the true recurring gross margins for Tesla's auto biz. It's funny because all these gross margins are higher than everything in the automotive industry.
That's the same argument that I just whipped up in the back of my mind. It's like, well, our margins are decreasing, therefore the business is going to become a value trap. Well, that's not necessarily true, right? Because they're still growing like 50% a year, 40% a year, whatever you want to call it. And so I just think you have to look at the trend as a whole. And, even in our comment section, right? Jay Kim said, Tevis, none of the other segments are producing significant revenue compared to auto. Analysts do not have blinders on. Sure. And analysts are very pragmatic in that sense by saying, well, I want to see the numbers. But at the same time, analysts again are just looking at this company like an auto business, and it might be totally valid, Jay, because the auto business is the main thing that is the revenue on the actual income statement. But if you look at the trend and the vertical integration, how all of these components play together, yeah, okay, energy is not, playing a huge part right now. But what about in 2 years or in 3 years when they're increasing 150% every single year, or 100% plus, let's say, it's going to be starting to make an impact very, very soon. You're on mute.
Oh, I was saying shout out to Miyoko in the chat. Me and Miyoko both thought Tesla would tank and we could buy some more, but it's not doing it. Now, let's see, what happens tomorrow, how the market reacts to this. There doesn't seem to be anything necessarily, as we talked about, bearish in the earnings call, but if the macro gets worse, then we will see how the market reacts.
I think one of the bearish things that I could see or could make a case for is the increasing cost of goods sold in 2023. Matt brought up a good point in the chat, asking, do we know how much lithium and other rare earth metals it will take to replace 100 million barrels of oil a day demand? As the demand for EVs across the board rises, the demand for lithium is going to rise and far exceed the capacity that we're at right now with our infrastructure. And what that's going to do is it's going to increase the price of lithium. And I think Zach on the call, Zach Kirkhorn, he mentioned this, and he just basically said, hey, 2023 is going to be more expensive because of lithium, and it's going to be more expensive from a cost of goods sold perspective. And that's a potential risk. But at the same time, to counteract that risk, Berlin and Austin now are operational, and a lot of the costs associated with ramping them up have now fallen. And so from a cost of goods sold perspective, we should still be good because we're still optimizing on those efficiencies.
It is going to be really exciting to see when the macro gets better, interest rates go away. Tesla's $150 right now. To not imagine them getting back to that $1 trillion market cap in the next couple of years, and having a nice little 2-3x from here at the bare minimum. It's exciting, especially for me as someone who doesn't have a large position right now, that has some cash on the side and that is getting ready to deploy a lot more. It's exciting to see what it looks like. You've been in the stock for a while, obviously. So before we move on, let's talk a little bit about your mood swings or your temperament dealing with the stock collapsing down to $100 and this dip. And did you always think this was FUD over the past 3 weeks, or were you a little concerned as a shareholder at all?
So first of all, I don't really get emotional because, Tesla's a company growing 50% a year with $22 billion cash on hand and no debt. That's as rock solid as you can be right now. And if there are warning signs that are going to flash, I think we just heard it on the call, right? Management, there's so many irons in the fire for where this business can expand. And we're going to talk about all that. And so that doesn't really make me concerned. But what I will tell you, Mint, and I don't really like to talk about this on my channel because I don't want to disclose actual dollar amounts because I have family that watches. But I have 6 figures in Tesla stock alone. And I think 2022, I added the most I've ever added any single given year. But again, I've been investing in Tesla for 3 or 4 years. And that drop, man, I bought a whole bunch at 105, 107, 112, 175, 220. So again, but my cost basis is really cheap, right? Because when I started buying, it did a lot of multiples in 2020 when it blew up. But I bought a ton in 2022. So from an emotional perspective, I'm not really fussed at all. I was actually quite excited about it because I know that I have that decade-long horizon for holding this stock.
Yeah. And it makes sense if you've been there for a while. If Palantir would go through something like that, my conviction obviously very deep, so I would just keep buying it. And yeah, it's 6 figures in a company is
it's like half my portfolio, right? So
yeah,
I just it didn't start out as half my portfolio. It started out as 15% and then 20 and 25, and then eventually became half my portfolio. And I wouldn't be surprised if it increases to more than half my portfolio, but fuck it, man. If you have the conviction, It's so safe in my mind, right? Because they don't have any debt and they're profitable and they have so much cash on hand. And one of the points, Amit, I'm going to throw this up. I'm going to send this to you and then just throw it up here and we can walk through this tweet together. Okay. So I just sent it in the chat here because I want to talk about this point in terms of the ROI on the cash that they have on hand versus their debt. And I really enjoyed this tweet.
Yeah, I want to talk about this as well. This is interesting. Okay.
Okay, so can you zoom in a bit?
Yeah.
Okay, so the benefits of paying down debt. Tesla enters 2023 with an excellent balance sheet. In fact, they're earning more on their cash investments than the interest expense on their debt. In Q4 2022, they had 157 million interest income versus 33 million interest expense. So they're actually like, that is the benefit, very simply put, for them to have so much cash, $22 billion cash on hand and zero debt. They're in a position of power in terms of making any capital investments, any expansions, any new factories, or just sitting on cash and just chilling for a year, right? So the $3.6 billion Nevada factory, I think Mexico is going to be announced very, very soon. There's been a lot of hints around that. New product lineup, they've already said that that's been started. So March 1st, my guess is I'm 80 to 85% confident. I'm not sure, of course, but from the tone in the call that they're going to announce a new product, whether that is, the cheaper under $30,000 car, or whether it is some type of, robotaxi network, something like that. They're going to announce what their next initiative is. And so, think of all these things put together. How is it not the safest 2 or 3 or 4x in the market at these prices? I don't know.
Yeah, especially with the PE also being now 35. I mean, it was 25 at one point. And Microsoft, for example, is growing 5-6%, and they're trading at a 28 PE. And it's just would you rather get that growing at the rate they're going, or something like a Tesla that's just going 40%? It's also hard for the bear argument to be, well, it's a car company, it's not an automotive company, because it's growing not like a car company, and the margins and sort of the technological vision behind it and the bull case doesn't make you feel it's an automotive company. I mean, I saw a stat yesterday that said Honda spent $1 billion on advertising and they sold less cars than they did last year. Tesla spent nothing on advertising. And
let me see if I can, because I have a Discord and I just post all this stuff on Tesla, but let me see if I can find this image that I posted on the Discord. I got to scroll a little bit up for it. But I think it's a really interesting image if I can find it. So let me just scroll real quick.
While you're doing that, I'll read some of the chat.
Yeah, please.
Amit, I highly recommend searching for AI plays in crypto field to grow the channel, and that's going to be another bull thing. Yeah, AI and crypto. It's you got blockchain, you got Web3, you put them together, you got there's a lot of stuff going on there. Definitely something to look into for sure.
Let me do this. Let me see if I can share.
I want Tesla to be 30% of my portfolio. It's currently about 10%. Mad Money 6 figures is awesome.
Let me present my screen here, sir. Boy, let's do that. Let's do that. Can you guys see the Discord here?
Yeah.
Great. So look at this tweet, right? This is Ford sales versus Tesla sales. Can you notice a trend? And I think that this is something that a lot of people, and this is why I've been investing in Tesla for so long, and why I keep adding and adding and adding, is because of the trend, because of the ability to zoom out and look at everything, how it plays together in an ecosystem. Traditional OEMs have sales that are far exceeding Tesla sales, but they're just declining every single year. Whereas Tesla, 1.31 million in 2022, they said they're aiming for 1.8 million in 2023. However, the internal goal, what they're internally aiming for, is 2 million cars, but they're sandbagging that number due to any unforeseen global events that may happen. And so, what do you think is going to happen to this trend? When do you think that flippening is going to happen from when Tesla starts selling more than Ford sells, or when Tesla starts selling more than any of these other traditional OEMs are going to sell? And so, the writing is, I think, on the wall with regards to their growth rates. And if you pair that together with their financials, I don't know. You tell me, how are you not bullish?
Yeah, Elon, obviously the 1.8 million was a sandbag, and then he got pressed on it by the reporters or the analysts. They were like, "Hey, like, are you really trying to do 1.8?" He's like, "No, we're trying to do 2, but like, if another pandemic happens or a world war or something, we probably shouldn't guide for 2 million." So it seems like it's a nice sort of sandbagging by Tesla. It seems obvious that they would be able to do it because demand is not an issue; it's just a production question. So as long as everything goes well in places like China, it potentially should be able to get done. The other interesting thing, as you said, about like where, you can't see the bear cases. I've been thinking about where money should go, right? Like if you're an investor, where do you put your money? Obviously, with interest rates rising, stocks become more risky. So treasury bonds become a little bit more exciting. You put your money in there, you get a risk-free 4%. And we can talk about how Tesla's making some money off their money right now in T-bills. But you got, as an investor thinking about this, Google is not growing at 40% year over year. Google, who knows, might be disrupted in search, or at least we understand the fragility of their search business, not from a dominance perspective, but just from a fact that if any new little toy enters the market, how much Google could feel like they're in a code red situation. Facebook, the metaverse is a long time away. I don't really believe in it, but even then they're not growing 40% year over year. Apple, likely not growing 40% year over year, selling a headset for $3,000 that no one's really going to use. So what companies are out there that are actually doing that? I mean, Palantir, hopefully, SoFi, hopefully, but those are still speculative plays. Sure. It seems like it's Tesla.
Sure. And the other thing is, like, this is the beautiful thing, man. All we're doing right now is measuring out based on current growth rates, current revenue, current sales, current production, what that will be like in 5 years, given the trends. What we're not accounting for is the value of their IP. Is like, I've heard this expression, I think on StockTwits or Twitter or something, where they're basically saying like, buying Tesla stock is like buying call options on Elon's brain, because you don't necessarily know what ideas they're going to come up with next. He even said it on this call. They're like, we have more ideas, more good ideas than we know what to do with here. And like, they have the smartest engineers in the world working for them. What is going to happen when it comes true? Let's say maybe it's in 10 years, right? Maybe it's in 5. But, one of the things that they were saying was like, the Optimus robot, which is on nobody's radar right now, like, and nobody gives it any credibility. And I get it. It's hopium. I wouldn't give it any credibility either. They're not even producing any, like, a robot. It can barely walk. But what if, right? And so it seems like this whole company is just a bunch of what ifs put together that is threaded through by execution, right? And so that Optimus bot has the potential to be worth more than the car business. Well, wait a minute. That's not just a hopium statement. That's a huge freaking statement, right? Because what is the global, auto industry, or EV, let's say electric, and then what could that Optimus spot be? We're entering hopium territory because none of this thing will flesh out in 10 years. And even if it does flesh out, there's like 10 years worth of execution risk there. That's why nobody today is giving it any slack. I understand that. I agree with that. But I'm just saying that you don't know when these ideas will come up. Like, at some point in Tesla's history, robotaxi as a concept didn't exist. Optimus as a concept didn't exist. And so this company, now that they have cash and they have the resources and they have all the best engineers in the world and they have the ideas, they have the capabilities to execute. Can they? Will they? Question marks. But they have all the ingredients now.
And isn't investing, at the end of the day, like assuming a company can execute on an idea? Like, obviously, if you're a super, super value investor, you want a dividend, or you think like Heinz is going to sell this much ketchup. I know how much they're going to grow that ketchup. Therefore, I understand where my money's going to grow. But if you're investing in tech companies, like, you want Google to find a way to diversify outside of search. Sure. You want Facebook to do something more than ads. You want Microsoft to do things like buy LinkedIn, buy GitHub, buy Activision. So if we're taking a call option on Elon's brain, the contingent variable becomes, is that brain something to take a call option for from 2 perspectives? One, the imaginative perspective, ideation. And, you got Neuralink, You got Tesla, you got SpaceX, things that have been executed. Big imagination. And then the execution perspective. Has he executed on those? And he's executed pretty flawlessly across all these things. Twitter is the latest execution, and it's not bankrupt yet, so we'll see where that goes. It seems like there's no other stock really to bet on outside of
I think there was a tweet, so I can let me see if I can put it up.
ER Pro says if Neuralink IPOs, he's all in. Neuralink is crazy, bro. There's people who are not walking who are now walking because of Neuralink. I mean, that's insane. It's absolutely insane.
Yeah. Anyways, without going like way too much into the hopium, I found this tweet interesting. You know, the fact that Elon is a founder of OpenAI. I mean, he was just one of like 8 people that put $1 billion down. So I wouldn't necessarily go so far as to call him like hands-on in terms of development of OpenAI, but he at least saw the vision for it, and he invested a bunch of money way back. You know when. 2013, I think it was, or whenever it was. But anyways, the fact that he was involved, let's say, with OpenAI, which is the maker of ChatGPT, seems to be glossed over. PayPal, Tesla, SpaceX, Neuralink, Boring Company, OpenAI. This means that Elon has averaged a multi-billion-dollar company every 5 years for 3 decades. Now, obviously, there's a lot that's, a lot of, let's say, bullish sentiment or bending the absolute truth in that statement. But still, it speaks to that high-level vision. It speaks to like the fact that this guy is looking at multiple expansion as opposed to percentage expansion. He's looking at what can change a paradigm. And I think just going back, FSD, Robotaxi, Optimus, all of these things are multiple expansion potentials for Tesla.
Yeah. It's really exciting. It's really exciting to see what they're doing. All right. Tesla insurance. Can we talk a little bit about that? I know very little about this. What's the bull case on this?
Okay. So I'll read you some of my notes from the call. And I found this to be actually one of the most interesting pieces of the call was Tesla insurance. They said that it'll take some time to become big. So, to Jay's earlier point on energy, it's not big yet, but it's going to take time to become big, but it will become big because of the ecosystem effect. For every car that they sell, they offer the insurance, it's currently at 300 million annual run rate, which is peanuts for Tesla at this point. It's growing 20% every quarter. 17%, get this, Amit, 17% of customers are using Tesla insurance in their active markets, and this is trending up. The problem is they're not allowed to be in many markets yet because every market, like every state, is specific in terms of insurance, and so they have to basically expand very slowly. And that's why, when you're thinking, okay, wait, 17% of customers doesn't equate to 300 million. How does that work out? It's because they're not in a lot of markets yet. But 17% of customers are using Tesla insurance in their active market. They have a higher take rate on new deliveries, so they're making more money on new deliveries. And Elon said this: other car insurance companies now offer better rates because they have to compete with Tesla. They basically can't gouge their customers on price because Tesla gives them such a more attractive price. And the reason why is because they have all of the data through their over-the-air updates. So traditionally, insurance companies, if I want to buy a car, if I buy, a red car versus a white car, I'm going to have a higher insurance premium because there's, more risk, or if whatever, there's bias involved into that. However, Tesla is all defaulting to the data, and the data is provided by over-the-air updates, which is the same benefit that provides you full self-driving, which is the same benefit that, so on and so forth. And this is like how it's all intertwined into this vertically integrated stack. It gives them basically in insurance a feedback loop. And get this, because of this feedback loop from gathering data, they're now understanding more how accidents happen, what type of accidents are happening, because previously this was the insurance company that would handle the accidents. And they're actually changing some of their designs for cars to account for the repair of Teslas worldwide. So they're actually changing some details on the bumpers, and they're changing some small minor details on the cars from the data that they're gathering from Tesla insurance. So they're making small vehicle changes that are based on these learnings. And what this is doing is it's also bringing the repair costs down for these people. So now imagine this, okay? If it's currently in 12 states, what happens when it's in 50 states? And it has still 17% of new cars that are sold have Tesla insurance. How fast is that going to ramp up? And so if you think of these things and you put them all together, it's very difficult to not be bullish.
And a Tesla customer would buy Tesla insurance over like State Farm because they would get a better deal, and also they would be able to repair their Tesla way easier than State Farm would be able.
And it's way cheaper, man. Because like in reality, I might be a super safe driver, but just because I'm buying, I don't know, let's say a Lamborghini as opposed to a Honda Civic, and it's red instead of white, my insurance premium is through the roof. But Tesla's like, screw that. There's no bias in this process because we have all the data of how fast, you press the pedal to the gas, quote unquote, weird pun to use, but they have all the data and they're collecting that. So basically saying, if it's safer, if you're a safer driver, why charge you that premium? We don't want to gouge. And I think even Zach Kirkhorn said on the call, like Tesla insurance right now, like our goal isn't like to maximize profits for it. It's just to expand it to more people. And that's smart, right? They got to go wide and then they can go deep in terms of profitability.
Man, it's interesting because I've been waiting to buy heavily for a while, and I've been getting more bullish over the past couple of weeks. I've been talking to a lot of different people, and I said I wouldn't buy until earnings, really. And so now that I've heard earnings and I've heard the breakdown and I've heard it from management, heard it from Elon, it's hard to find a bear case. Like it's, and I'm searching for it because I want to be skeptical on it, but it's hard. It's very difficult if they put up the only way you could find the real bear case is if people just don't want to buy a Tesla, because everything is contingent upon, are they getting cars out the door? FSD, the margins, profitability, all that stuff. And if people want to buy a Tesla, they want to buy a Tesla.
I think the most consistent bear case long-term that I've had is the key man risk. And that's basically
Elon risk, basically.
Elon risk. And the larger that Tesla grows, the more that's reduced in my mind, because they have a top-notch executive team in Zach Kirkhorn, in Drew, and the entire Tesla team across now China. I think they recently promoted the head of Tesla China to like their head of sales in general. I forget the gentleman's name, but basically the more mature that the company becomes, the more mature that the brand becomes, the less key man risk you have on Elon specifically. And at this point, there is still key man risk, but in 2 years or 3 years, I mean, Elon might step away from Tesla altogether, and that's always been the plan. He said, I'm going to step away when I don't have value anymore to provide. And the key question of, is this business in the eyes of retail going to make it or not? It's like, if he steps away, how much does that stock price fall? Like, if he stepped away today, it could fall 40% overnight. I'm sure it could. But if he stepped away in 3 years from now, I don't think that would be as big.
I want to get back to what you're saying about Keyman, but I want to answer this question real quick.
Sure.
Sonny Rod says, bear case is recession, bro.
Yeah, and then what happens after recession? What, you think we're going to be in a 10-year recession? Or do you think that 2023 is going to be such a severe recession that they're going to burn through $22 billion of cash and all of their demand, and their growth rates are going to, plummet? They're not going to have any free cash flow.
Yeah.
Like the stock has fallen 70%. Like the stock has
fallen. Is it going to $70, right? Like that, I guess that's the larger question here. Is it falling another 50% from it? It's hard to imagine. Also, if the bear case is recession, and recession means people have less to spend, well, prices got cut. And if 2 million people, if you think 2 million people this year, even in a recession, can't buy a Tesla, I mean, with these prices being down, if they got to buy some level of a car, and maybe there's not 2 million, maybe there's 1.6 million, but that's still way more than Ford's going to sell in comparison. And the market's going to have to take that into account.
I love your chat. You're all
bro, no one is moaning. I don't know why you guys are you moaning, bro? I'm not moaning. Like, look how far my mic is. If I was moaning, I would have to like be so close. I don't get this. This is ridiculous.
Anyways, my point is, look, okay, so here's why I don't really take a lot of stock, no pun intended, in terms of that recession point. Why? Because them lowering the price, the average selling price, was essentially like a bluff for the market. I love how you went on mute. Just kidding. Anyways,
I'm literally like, I'm pressing the mute button at this point. This is ridiculous.
Them lowering the average selling price was almost, in my eyes, like a bluff to see what would happen. And what did we see happen? Inventories fell 50%. inventories for used Teslas fell off a cliff. They had to quickly increase the price of Model Y less than a month after they decreased it again because they were getting backlogged again. And so if you have a hair trigger, demand question right there, if they see demand waning a little bit, they can just reduce the price by like $5,000, which in the grand scheme of things, as they're increasing their margins on their software and their margins in terms of their optimization with lowering cost of goods sold, that's not a huge hit. Demand comes right back. And I think that honestly, like them having lower prices right now is like fantastic because they're just going to keep capturing more market share in my mind because Ford and, GM, Toyota, they can't compete. They can't compete because they're going to be losing money on every car. And a lot of these traditional car companies are already unprofitable. They already have huge amounts of debt on hand, and they're already like teetering in terms of their financial stability. And so Tesla, if they want to start a war of attrition and starve themselves out, sure, we'll see who's the last man standing because their business model is just different, man. They don't have like a dealership model. They don't have all of these infrastructure changes to their cost structures. They're not trying to adapt their factory to build EVs. They started out building EVs. And so a lot of these things, I think, just play in their favor if they lower prices.
It's exciting. Real quick, do you have a Tesla, Tevis?
I don't drive a car, bro. I live in downtown Toronto, and it's like jam packed here. There is zero value in me driving a car. I've driven a Tesla. I don't own any vehicle.
I've actually, the only Tesla I ever drove was Vitaly's Tesla. It was it was kind of scary because we had just had dinner. I just convinced him to invest $10,000 in my startup, and then we're in the car, and he's like, "You want to drive my Tesla?" And I'm like, if I crash this shit, I don't think you're gonna give me the 10,000 anymore. But he's like, "No, drive it." So I drove it, and it was really cool. It was a different experience. And at that time, we were sitting in his car. We outside a Cheesecake Factory. He was like, "Bro, buy Enphase." Enphase was at $140. I was like, "It's solar panels, bro." Like He's like, "No, it's micro inverters," and the Enphase runs to 350. And so. I should have bought it. Look, the key man risk. An analyst said, "Hey, Elon, brand, politics. Do you see there's any negative feeling towards Tesla?" He says, "Let me look at my phone. Looks like I have 127 million people."
I didn't like that, but I think
why not? Why not?
It was very cocky in terms of like saying like, "Oh, I'm like the most influential," and I'm just like, okay, but you have to use that. So I actually took a note on that. I think the part that I did like was the overarching point to say Twitter is the most powerful tool for driving demand on Tesla. The net value of Twitter is gigantic. So I thought that was more so a Twitter plug and, less so a point around like the politics or what he was saying. He was basically, the question was around, Elon, do you think your political view or leanings or comments, just Elon the person, is affecting Tesla's brand negatively? And all he said in response was, "I have a voice, it's amplified, and everybody around the world can hear it, and that's a big value for Tesla long term." That's a true statement. That doesn't necessarily answer the question of saying, what is the sentiment of you personally versus the Tesla brand personally? But again, I think it ties back to this key man risk situation that the more Tesla posts consistent growth numbers, and I think 2024, I think, will also be a huge year, probably the defining year for this. That's when you're going to decouple what Elon does or Elon's influence in Tesla with Tesla, the brand, as a standalone.
Yeah, I agree. And, one of the things that he said about this that was interesting to me is like, all right, you have 127 million Twitter followers. I get your point. I personally liked what he was saying because he said on Twitter a couple of days ago, he was like, brands just need to tweet interesting things and they will get followers, because there was some comparison of like how much Honda and Toyota spend on Twitter advertising versus Tesla. And when you are the personal brand, it's kind of like what I'm trying to do with my startup. When you are the figure, the thing behind the figure benefits massively. Now that thing has to grow. It has to be independent of the figure. Sure. But if the figure is there, if Kim Kardashian is Kim Kardashian, Skims becomes a $3.2 billion company. So I think it was a fair question from the analysts, because they were like, "Bro, if you are being this political and this divisive," which I think, quite frankly, he has been over the past couple of weeks, that may negatively affect Tesla. But at the end of the day, the product is what people care about, not the figurehead, as much as we think they did. And if more people keep following him, even if he is the first account that pops up on a new profile of who to follow, like people are choosing to follow him. People are choosing to get information and distribution from him.
I don't disagree with anything you just said. But the point stands that Elon has a vested interest in Twitter's growth and in more advertising dollars coming to Twitter. He has ulterior motives where Twitter is concerned. And so somebody just donated $2. And so obviously he's going to plug Twitter. Right?
Yes.
So that's my whole point. I agree. It's like he plugged Twitter. And that's all I'm saying. Like, I'm not saying that Twitter doesn't have potential. I'm not saying that brands should not advertise on Twitter, but I'm saying in answering that question, he did less so talking about Tesla's brand and he more so talked about Twitter as a platform.
Yeah, but I think what he was, yes, I agree with you. I think his point was trying to be like, every brand needs distribution. And what are these brands fighting for on social media? They're paying millions of dollars to ad agencies to get them impressions and followers. Yeah. And it's like, he gets that. Well, we'll go to a Social Blade right now. He gets probably around close to 50,000 followers a day, right? And I think that was his point. Is just like, I think his point was in terms of distribution, it's hard to be like me tweeting reduces Tesla's brand, because if I have these many followers and I am the basis of Tesla's brand, as you said, that is the key man risk, then Tesla is fine because people are following me at the end of the day, which means they like Tesla.
So let me see if I can pull that up actually, because the interesting point on that, Amit, was, let me just see.
He averages 132,793 followers a day on Twitter.
Yeah. I mean, it's network effects, man. The bigger you are as an account, the bigger you're going to, grow. Let me see.
Shout out to ERP Pro, BTC to the moon, and Lambo. Forget Tesla, $2. Thank you, ERP Pro.
I will find this. Yeah, just answer some more questions from the audience.
I'm gonna share the Social Blade right now so people can see it. I mean, these numbers are insane, guys. Like, these numbers are insane. I mean, he tweets on average 20 times a day, and he gets 130,000 people around the world to know who he is. And now that he added that views functionality on Twitter, and you can see the views on a tweet, the guy averages a couple of million of views per tweet. It's just, if you want to sell something and you get 1 million people to see it, you can convert some of them, especially if they're in a diehard cult. But I do agree with you that key man risk will be reduced as Tesla. Steve Jobs didn't have to be around for Apple to keep growing at the end of the day because Apple was Apple. But he was pivotal in those first 10, 15 years when he came back to get it off the ground.
All right, let me show you this. Okay. This, my friend, is Tesla's Q1 2022 update. So a year ago. You see a trend? All traditional car companies advertise in the Super Bowl, and Tesla gets the most amount of volume the day after Super Bowl because all the car companies, basically trigger...
Volume of what? Volume of what? Volume of just like attention writ large?
Yeah. I think that's what it is.
It's probably like search traffic or something around that line.
Yeah, I think it is search traffic on their website. I'm not exactly sure about that. Maybe if somebody in the comments knows exactly, but the attention is basically there. And so the point to be made on a lot of these advertisers is like, yeah, sure, they can advertise on Twitter. Elon owns that platform, so there's going to be an association. But it doesn't matter because wherever these advertisers go, let's say Super Bowl, they're spending millions of dollars for like a 30-second ad spot on the Super Bowl. And what's happening is people are, it's triggering in people's mind that, oh, wait, I need to buy a car. What am I going to buy? Let me just do a quick Google search. Oh, wait, I want to buy a Tesla. Let's go on their website, see what's up. And so it's having the inverse effect of saying, from a search traffic perspective, if Tesla doesn't advertise in the Super Bowl, but all these other competitors do, and Tesla is just seeing an uplift as a result of them. So advertising it's a tricky subject when your product is not up to snuff from a feature perspective, given versus your competitors.
How did you feel about this chart? I don't know if you got a chance to see this one.
Did not see this.
Okay, so this is a cool chart. So this Tesla is one of the fastest growing companies in history. Here's how its growth compares today to largest tech companies after crossing 10 billion in revenue. So it's showing after the company hit over 10 billion in revenue, that we'll count that as year zero, how long it took them then to grow. Tesla has grown so it does 5 years. after you hit 10 billion in those next 5 years, Tesla has grown on average 47.3% year over year. The next closest is Facebook at 41.5% year over year growth.
Yeah.
So
it's crazy.
It's one of the fastest.
And it's crazy even, given their price to earnings right now. I'm going to also send you something, Amit, and I want you to put it up. Or actually,
Tesla sales. It was search traffic after the Super Bowl. That's what people are saying.
So let me just put this up. And I think this is also a similar vein in terms of what you're saying, but I think it's beautiful just to realize the compounding effect in general. So I'm just going to share this. By the way, I'm really enjoying the stream.
It was good.
Okay, this is what happened in 10 years because Elon said, wow, a lot has happened in 10 years or whatever. Look at Tesla's deliveries in 2022. It's nearly the same as its deliveries all throughout 2012 to 2020. And that's the power of compounding, right? Like they did this year just in deliveries almost as much as every single like other year except 2021 combined.
Yeah, that's
like you tell me that doesn't look like an exponential growth curve, like the typical economics textbook hockey stick growth chart.
It's exciting, man. This is super exciting. I think we're ending it off here, but yeah, I mean, oh, my camera dies right when let me change the camera real quick. This is it's an exciting time to think a little bit more deeply about Tesla. I obviously have not fully loaded up and got in. I've been DCing a little bit here and there, 130, 170, 150. Getting more excited just because I don't see the only bear case is the lack of growth, which would mean lack of demand, which would control the internal link to everything, and that just doesn't seem like it's there yet. So and Cybertruck, I mean, we barely talked about that. That's also coming out.
So right? There's like 3 more things that I want to talk about, and then we can wrap. Okay. Let's start with Cybertruck. What they said on the call was Cybertruck is going to start in the summer of 2023, but we shouldn't be focused, like from an analyst or retail investor perspective, we shouldn't be focused on when they start because it takes them a long time to get to volume production. Volume production is really what we care about. That's going to start in 2024. So from a production perspective, it's not going to be significant until 2024, until volume production starts. And from a revenue generating perspective, it's not going to be a significant contributor to the bottom line in 2023, but it is going to be a significant contributor to the bottom line in 2024. In other words, Cybertruck as a product line is going to start contributing to Tesla revenue in 2024. And Cybertruck has, hardware 4. It's like one of the best products, or definitely one of the most anticipated products out there. So I'm really excited just to see it live. Elon was saying, he's going to definitely be driving one every day. I can't wait to see these things on the street.
That's going to be cool, bro, to see Elon just whipping it in his Cybertruck. Because, again, he said it's one of those products that comes around once in a while. And, it's just like, and again, as we were talking about companies you want to invest in, what's coming up, what are you excited about? Like, Cybertruck is something. Do we not think the market's going to give them a little bit more momentum when Cybertruck comes out and it sells out? Like, you can't get them out the store fast enough?
So that was Cybertruck was number 1. Number 2 is I want to share with everyone one of the most important things that people probably missed in the earnings call, and probably one of the most misunderstood things about Tesla in general. Because an analyst in this earnings call asked them, when are you going to be releasing new products? How does that product lineup look like? And I think at this question, Elon and Zach and the rest of the team were sort of like rolling their eyes. I mean, obviously it's only audio, but I was rolling my eyes. And Elon said something that is really key. So 2 things. Number 1, he said there's a number of future products. Not one, a number of. And probably there was a lot of things dropped for March 1st as being the time when they were going to talk about their future expansion plans from a product perspective. The key thing was that he said future products will all use 4680 cells. Cell production is a limiting factor in all new vehicles. In other words, the availability of lithium-ion batteries is going to be a limiting factor in new vehicle production. He said, it's no use for us to make 10 new models of cars, like 10 new different products, because we only have a finite number of batteries. So what are we going to do? Are we going to just shuffle the same amount of batteries to all the different cars? We need new product production to match battery production. So batteries right now and 4680 cells and the cell ramp capabilities, that's what people should be looking at. Because the moment that Tesla starts producing batteries, let's say 2 times or 3 times or 5 times more than they're producing cars, that's when it's going to unlock the roadmap for them to think about new products. If it's a vertical takeoff and landing, vehicle, like a VTOL, like a jet or something that's electric, or a plane, or a jet ski, or whatever it is, it doesn't matter. They all run on 4680 batteries. And so batteries are the fundamental thing for investors to understand. That's why I pay so close attention to the battery ramp, because that's going to dictate when and how they release new products and how successful the ramp of those products is going to be.
Right, because you can't release an eVTOL if you don't have the batteries to at scale to be able to manufacture it.
You can't release any electric anything. You need the batteries.
And what was the update from this earnings call on 4680? Is that going well? Do we see that them getting to a better trajectory on batteries, or is it still?
Yeah, so the 4680 ramp, 10K vehicles per week. It's in one of the 4 lines in Texas, and the other 3 lines are in installation. So that's going to ramp up pretty fast. It's a cost-effective ramp that's well ahead of Cybertruck. That at least is the goal for the year. So they want to ramp up the 4680s before they start volume producing Cybertrucks. Because again, coming back to the original point, batteries are the limiting factor. And so if you think of, when is that under $30,000 Tesla going to come out? Or when is that, robotaxi network, or whatever other product that you might think of, you need to think about the batteries first.
Yeah.
So that was point number 2. Point number 3, and I agree with the comment. I don't think VTOL is in this decade either. The point stands that anything you want to build, batteries is the fundamental building block of that. So point number 1, Cybertruck. Point number 2 on the cell production and batteries. Point number 3 that I wanted to make is simply on the Dojo and AI component. And very simply here, they basically said, Elon's been reiterating this for quite a while, saying that Tesla is one of the world's leading AI companies, both from a hardware and software perspective. Now, that is a much more succinct value proposition or definition of the company in general, as opposed to Tesla being an auto manufacturer. They're an AI company. Hardware 3 is the most efficient inference computer in the world. 5 years after it was introduced, it's still like the number 1. World-class talent, world-class AI talent is joining Tesla regularly, especially after the Optimus release, especially after the Dojo release. Elon said, we don't see anyone even close to us. And he said on the AI component that this thing has an order of magnitude potential and market cap. In other words, this can 10x our market cap. He said that we think Dojo will be competitive with NVIDIA by the end of the year, and it will surpass it in 2024. We see a path to 10x in training capabilities, but it's hard to say when we're going to achieve that. There's no timeline to that because, it can be quite a while for them to actually have these technological advancements. But they do see that path from the AI perspective to 10x that business market cap. So that's huge as well. So, okay, let's count out how many of these different business lines can 10x that market cap, right? Like you have the different product launches, you have the Optimus bot, you have the AI component. Like there's so many different product lines that are game changers from shifting the entire paradigm of Tesla's business in the long term. Nobody is calculating those today. And it makes sense that they're not calculating those today because they cannot build a model that they can then do a discounted cash flow in terms of what is that going to, be in the numbers. It's all hopium right now. It's all execution risk based right now. But it's also the reason why I have 50% of my portfolio in Tesla and why I think the next decade is going to be fantastic for the company.
Yeah, man, the more you say this shit, the more I wanted to see earnings. I wanted to dissect some numbers. It's really hard, bro. And I know obviously I'm not trying to factor in the bot or dojo or batteries into my bull case, but as a investor, you have to think, what is the future of this company? What are they doing right now? How much are they growing? And what is a base case scenario of just 10 million cars by 2030?
Dude,
I mean,
don't
even 5 million cars.
Don't even factor energy. Don't even factor insurance. Don't even factor Dojo. Don't even factor FSD or Cybertruck or Optimus or any of these things. Their mega pack business, their solar panel business. Just look at it from even from a traditional valuation metric perspective, from a PE perspective, compared to how they're growing as a large cap company.
It's going to do 100-something billion in revenue this year, and it's for
400 billion market cap.
Yeah.
It's like a 4 price to sales essentially. But anyways, it's going to be a low year seasonally speaking, because man, all of these analysts, they still see it as this auto company, and that's fine. Auto is their primary revenue source right now.
What is the motivation for all these analysts to obviously, like, I wouldn't say you and I are the smartest guys in the world. Why aren't the analysts on the same wavelength as us?
Because
or retail in general?
They're very pragmatic. They only see the dollars and cents. And right now, the dollars and cents are coming just from the auto business.
But even with those dollars and cents from the auto business, we've agreed it's not a bad stock. I mean, we've agreed it's not a Toyota stock, a Honda stock, right?
Sure. But they're also seeing, okay, so they're saying most of the dollars and cents are coming from the auto segment. Therefore, very, very basic logic statement. Therefore, it must be an auto company. All other auto companies, regardless of them being value traps or them declining in revenue, declining in production, declining in growth, declining in margins, regardless of all that crap, all other companies in the auto sector are seasonal, so they're going to get screwed in a recession. All other companies in the auto sector are trading at this multiple. Tesla's trading at this multiple right up here. Therefore, Tesla is way overvalued. Super simple.
So the Tesla economist that took a $10 million loss on Tesla, who's a retail trader who sold out of it, do you think that was a smart decision for him to do that? I know investing is all personal and subjective, but do you think that was purely irrational as the sky was falling?
I mean, everybody has their own reasons to sell them. But my guy, we've been on the call for over an hour. It's 50% of my portfolio, and I've just been like spewing bullish sentiment for over an hour. I mean, I don't, I think my answer is going to be very biased. But what I will say is, like, everybody has their own reason for selling, and if it made sense for his financial situation, it made sense.
Yeah, the reason I'm asking is because I'm not as deep into the Tesla community as a lot of other people are, and so when I see a retail trader, like for example, I mean, if I saw a retail investor sell out of all of his Palantir, that would raise a flag. But like, why? What happened? So if I see a retail Tesla guy who has a large level of influence just say, I'm taking a $10 million loss because I've lost faith when the stock is at 110 or 115. To me, that's a red flag, because I'm like, well, but retail is the stock. So what is going on in your head? That's great. Now, so to me, I'm looking at earnings. I'm like, all right, maybe that's an anomaly. Maybe that's not,
Look, what I will say is it takes not one, but many retail investors to lose faith for a stock to fall 70% in one year, in one quarter.
Yeah.
A lot of people lost faith. Elon bought Twitter for $44 billion. All he was doing was tweeting nonstop. Investing in the short term is very emotional, and people don't forget that, like, you're playing a super imperfect game, because everything that you invest, the opportunity cost is like 3,000 other stocks in the market for your money. And so analysts, a lot of them, they have yearly price targets. A lot of them are super short-term focused. They see Tesla in the next 12 months, the next 18 months, and only what they can project out. That will only give you a fractional view in terms of their actual business. And it might also lead to a lot of institutions and a lot of retail investors selling Tesla today only to buy back in 12 months, because in that span of the 12 months, they could have made more in another given stock. That's not the game that I'm playing. I'm playing a much slower game.
Right. All right. This was exciting. This was fun. A couple quick shout outs to the 98 people here. Thank you for joining. Tevis's channel in the description. I highly recommend everyone subscribing if you're not subscribed already. Really great analysis, great DD on tons of companies, tons of stocks. And Audia, my startup. Please check it out. Audia.io/register. We are trying to build a YouTube of audio. Lots of awesome stocks content on there. Farzad is putting all of his audio content on there, so you guys can check out his content if you want to listen to it audio only. And this was a really great call. This is one of those things that I was excited to do because I knew you as someone who has 50% of their portfolio could help educate me a little bit more as someone who has yet to take the real plunge. Maybe I should have bet $100, but again, I just didn't have the conviction, and I wanted to see Q1 earnings. If I have to buy it at 160, given we think the stock could be $300-$400 by 2030 at a bare minimum, that's not the worst thing to DCA into. So it was exciting. It was really exciting to get into it.
Drop a like if you're still here, 96 people. Make sure you like the video, and then all the links are in the description.
Kelly also says, Amit and I have a podcast on Idea. Yes, that is true.
Kelly's just trying to plug her own thing right now.
It is currently in intermission, and it will be back one day after a certain thing happens. It'll be back. All right, that's it. Thank you, everybody. Appreciate it. Fundamentals of Investing podcast. We just talked about the fundamentals of Tesla Q4 2022 earnings. We will see you, me and Tevis, on Friday for SoFi Weekly.
SoFi Weekly.
Bye, everybody.
See ya.